This is just another attack on Shiba Inu, directly from the US government, but it could be the worst one yet, perhaps resulting in the ecosystem's total collapse. Watch this important video as we go into the specifics and discuss the seriousness of this issue. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Let's start at the beginning of the narrative, however. 5 months ago, the Shiba Inu developers unveiled Shibarium, a Layer 2 scaling solution designed to tackle the problems the Ethereum network was presenting. Shibarium was developed to provide a more affordable option to Ethereum because of its often skyrocketing transaction costs. Facilitating quicker and less expensive transactions is one of its main goals. Costs are sometimes as little as 1/100th of a cent. The Shiba Inu developers have been tirelessly working on moving their applications from the Ethereum network to Shibarium ever since the project's launch. Apart from the general relocation of Shiba Inu projects to Shibarium, SHIBASWAP is one particular project that is going through this change. SHIBASWAP is a decentralized exchange that functions within the Shiba Inu ecosystem, as you are undoubtedly well aware of. It lets users trade different tokens and take part in liquidity pools. Within the cryptocurrency world, SHIBASWAP created a lot of buzz when it first began. Its introduction accompanied the height of the Shiba Inu coins craze, which added a great deal to the mania surrounding the endeavor. SHIBASWAP was essential in generating enthusiasm and investor interest in the Shiba Inu cryptocurrency during the 2021 bull run. The decentralized exchange gave investors a place to trade and stake their tokens, which eventually helped to fuel Shiba Inu's explosive price increase. Driven by the excitement around SHIBASWAP and the larger ecosystem, many early investors in Shiba Inu had significant returns. Some even became millionaires due to the coin's extraordinary price growth. SHIBASWAP is thus becoming SHIBASWAP 2.0 as part of the ongoing transfer to the Shibarium project. This upgrade brings the exchange into line with the cost-effectiveness and scalability of Shibarium's Layer 2 scaling solution, which is a major accomplishment. An essential component of the Shiba Inu ecosystem is the continuing transition of SHIBASWAP and related projects from the Ethereum network to Shibarium. It not only makes sure that these initiatives work with a more effective infrastructure, but it also puts them in a position to succeed in the quickly changing decentralized financial market. SHIBASWAP 2.0 and other migrating projects are well positioned to provide better user experiences and increase acceptance and usefulness for the Shiba Inu community, thanks to reduced transaction costs and expanded scalability. We refer to it as actual evolution. Imagine this, with initiatives like Shibarium and SHIBASWAP 2.0 promising to revolutionize decentralized banking, the Shiba Inu community is humming with enthusiasm. But as this development picks up steam, an unexpected roadblock appears. SEC. Yes, the Securities and Exchange Commission has just thrown a curveball with the intention of stopping the Shiba Inu ecosystem's migration and advancement. So what was done by the SEC? Why is there such a big onslaught on Shiba Inu? And why can it be a long-term setback for the whole community? Keep checking back as we reveal the drama that is developing and what it means for Shiba Inu and its investors. SHIBASWAP 2.0 is essentially an enhanced version of your preferred decentralized exchange, which is now transitioning to use Shibarium's powerful engine. Many exciting new features and enhancements that make trading and liquidity provisioning simpler and more effective are included in this update. First off, Shibarium's technological wizardry allows for very quick transactions at significantly reduced rates. Therefore, it's more affordable and seamless than ever to exchange tokens or offer liquidity to pools. Additionally, the exchange's interface is being updated, making it easier to use even for those who are unfamiliar with cryptocurrencies. The goal of Shiba Swap 2.0 is to make trading enjoyable and available to all members of the Shiba Inu community. However, a surprising development occurred just as the updated Shiba Swap was about to soar to new heights among the Shiba Inu community. The bombshell came from the SEC. They enacted a new regulation requiring decentralized exchanges to register with the SEC if their liquidity holdings surpass $50 million. The Shiba Inu community has been rocked by this regulation, and worries have been expressed about how it would affect the spread of Shibarium. Will the new Shiba Swap version's success be hampered by this legislative obstacle that stifles innovation? Stay tuned as we examine the ramifications of this regulation and discuss what it implies for Shibarium and Shiba Inu in the future. The new SEC regulation is thus hovering over the Shiba Inu ecosystem, leaving traders and liquidity providers to deal with uncertainty and anxiety. The need for liquidity providers to register with the SEC may result in more administrative and regulatory obligations, which might discourage participation or raise operating expenses. On the other side, traders may experience more regulatory control and attention, which would limit their freedom to participate in trading operations. Moreover, the implementation of this law presents noteworthy obstacles and possible hurdles for Shiba Inu and SHIBASWAP. Adhering to SEC registration regulations may prove to be a challenging undertaking, especially for decentralized exchanges that use cutting-edge technology, such as Shibarium. The legislative environment pertaining to decentralized finance is still unclear and constantly changing, which makes initiatives such as Shiba Swap much more difficult and risky. The main worry is that regulatory scrutiny may have a deterrent impact on Shiba Inu's development and growth as well as related ventures. Uncertainty around regulations may discourage adoption, innovation, and investment within the ecosystem, preventing it from realizing its full potential. Furthermore, the increased weight of compliance may cause resources and focus to be diverted from ecosystem growth and product development, which would slow down the rate of advancement. The dev team and the Shiba Inu whales are now embroiled in an enormous conundrum. On the one hand, adhering to the SEC regulation would enable them to maintain the Shiba Swap initiative, which was essential to Shiba Inu's incredible ascent in 2021. Compliance would, however, have a price, perhaps jeopardizing the anonymity and decentralized features that the community has loved and that Satoshi Kozama has championed. Alternatively, Shiba Swap may cease to exist if it doesn't follow the SEC's rules, which would terminate its business. One of the main pillars of the Shiba Inu ecosystem, Shiba Swap, would disappear, depriving the community of a vital trading and liquidity supplying platform. So, in your opinion, which option is best? If Shiba Swap has to survive, should the development team and the Shiba Inu whales put compliance ahead of decentralization? Alternatively, should they risk Shiba Swap's closure by refusing to bow to governmental overreach? This is a complicated choice that will have a big impact on Shiba Inu's future, as well as the state of decentralized finance in general. In their position, how would you respond? However, the story of the SEC's meddling with Shiba Inu doesn't finish here. Recall the new IRS rules for Bitcoin transactions that surpassed $10,000? The Shiba Inu environment now faces additional complexity as a result of these regulations. We are all aware that a percentage of the money collected from gas fees on the Shibarium network is committed to being turned into Shiba Inu tokens, which will then be burnt as part of the ecosystem's dedication to tokenomics and community incentives. By strategically lowering the total number of Shiba Inu tokens in circulation, these burns aim to perhaps increase scarcity and spur value growth. But now that the IRS has issued laws requiring reporting of transactions above $10,000, the procedure of carrying out these burns is more involved. Recall that the Shiba Inu development team burns between $80,000 and $90,000 manually for each burn. That is much in excess of $10,000. The difficulty is in coming up with a legal way to carry out the burns while following the rules. The Shiba Inu development team is faced with a challenge in this regard, as they have to negotiate the regulatory environment to guarantee that burns are carried out in a way that does not violate IRS regulations. Is it possible that the IRS problem is the reason we haven't seen another Shibarium burn in about a month? It's a question that a lot of people have been thinking about recently, but when we combine the IRS laws with the SEC's meddling, it's like Shiba Inu is facing two blows to the head. The decentralization and independence that Shiba Swap and Shibarium provide are being tampered with by the SEC, and the IRS regulations are making matters worse, particularly while doing Shibarium burns. For Shiba Inu, navigating all these red tape requirements is rather difficult. They act as massive obstacles in the way of achievement, impeding development and adding much more complexity than is necessary. It will undoubtedly not be simple for the community to overcome these obstacles as it works to find solutions. However, what are your thoughts about that? Please leave a comment below. I look forward to reading your thoughts. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.